Alrighty, what is good? We are going to go over, or I'm going to go over the 15 and the 30-second possible scalp opportunities that we had. Today is December 7th. I did release this full model yesterday, and I kind of really hope some people took this and kind of put it together and tried to trade it on the chart. Like I said, you do need some screen time to be able to not get caught up in the false moves with this, but once you see it, you cannot unsee it. So hopping in this, we'll go ahead and go over the 15-second first. Like I said, we always wait until 8:40 a.m. Central Standard Time to begin the hunt for this scalping model. So hopping into it, the first opportunity that we had was right here at about 8:46, going in 8:47. So as I like to say, I don't want any unmitigated fair value gaps up above. So on the 15-second right here, this leg right here, we are good. The displacement leg, this was our fair value gap right here. So what do? I'll go ahead and delete this real quick. We have we get our gone box, right? We draw with the specified levels that I've given y'all in the previous video, and we set a limit at this bottom yellow line right here. So set a limit there. We have a 12-point stop and a 18-point TP. As you can see, we would go break even right here. 6 points, pull our first one off right there, and then let the rest run to 18 points. That was a full W right there. Would have gave you about 1%, just depending on how much you're risking per trade. And then coming down here, no more opportunities right down here. We did sweep opening range low right here before we had a reversal right here. Came down a little bit further. This one was iffy. This is like what I like to do is you can pick and choose. Obviously, if we just swept sell side, we're expecting a reversal back into the range. So taking shorts off this wouldn't be that ideal, but if it's presented, you might as well take it, right? So hopping into this, we did have an opportunity right here that you could have taken. So what I would do right here is mark this. We'd place a limit right here. Go 12-point stop, 18-point TP. This one does look like it would have hit 12 points. Yep, went 12.5. So this would have hit our second TP or our first one, depending if you're pulling one off at 6 or not. But wouldn't have gone to full 18 points, and this one right after. Realistically, if we got in right here, we still would have been in the trade right here. So we wouldn't have taken this, but regardless, that still did hit break even right there, the 6 points. So that would have been a risk-free trade, no loss there. Moving up, we did continue to displace up right here, as you can see. No possible scalp setups for me right there with this entry model. Neither did we have right here, as we didn't have any short-term lows formed right here until about right here, but this wasn't a clean break right here, and no fair value gaps created there. So wasn't really entertaining it. Same thing right here. No short-term high put in there that we broke above. We just kept wicking right up there. And then the next possible opportunity was right here. So this was a weaker displacement, but this is a mechanical strategy. So anytime it presents itself, you can do discretionary, but it really just depends. Like I said, you can pick and choose. Like in this example right here, this would have been very, very ideal because we're obviously drawing to this low right over here, if that makes sense. So this one right here, we displaced above the short-term high. Like I said, very, very little amount, but we still did have a baby little fair value gap created right here. As you can see right there, baby little fair value gap. What we do, we place a limit there at our gone level, and this did go to our full TP. This actually probably, this would have been a TP break even right here. So go ahead and remove that. But however, we did have something, or no, this was a 30-second right after, which I'll go over in a second. But so right now we would be 1, 2, 3 0 right now. This is a 30-second. I'll come back to that later. So this is another 15-second right here. Is we're up towards this buy side level. We started to push off right here. We did not sweep up that high, like I said. So what do we have here? We have our short-term low put in right here. Let me mark it out right there. Mark out our gone levels on our fair value gap. It's all in alignment. That's what you want to see. So we'd set a limit there at that bottom yellow line. let me do my pre-specified level. So right here, this would not have been a loser because why? It went 6 points. We'd be break even right there. This did almost go to our first 12 point, but it reversed on us and ended up going up. So this would have been a TP break even, still 4-0. Realistically, I think usually if you pull one off at 6 points, you're about a 0.2 R, which is better because it covers commissions than rather specified. If you go break even at 6, you'll still be paying a little bit of commission. So it's good to pull some off on the table there. But moving on to the next one. This right here would have been invalid right here. That's why I don't have it marked out, because we have this unmitigated fair value gap up here. It doesn't matter how big it is, it still counts. If there's 2 right here, disregard it, wait for the next one. So this is one I took on demo today. This was a 30-second one that was a loser, very valid loser. But if you're using just overall market structure and we're making this discretionary, this could have been avoided because we were bouncing off of this order block down here. But I have so much data on this, I just like executing every time it shows itself, if that makes sense. So this, let's see. So this one had been valid because it's in at tap us in within 2 candles. Moving on, I'll go over that one in a minute. 15-second right here. So this would have been another TP break even right here. Yeah, TP break even with 6.75 points. Actually, kind of questionable. Not a huge fan of this. I'm trying to think. Actually, no. So you would have reason to believe that this wouldn't come up to that. So this is like sometimes when there's fair value gaps appear and there's an order block blocking it, a lot of times we won't trade up into that. I had a trade like that yesterday. It was super, super similar. But going on to this next one, this was a full W right here. This was pretty damn beautiful. So adding extra confluence in. What do we have right here? We have an order block. We could say all this down close candle right here is an order block. So it'd be more so right here, but we can mark the most obvious one right here. So right here, what do? We bounce off that order block, displace above this short-term high that we put in. We mark our levels out with the gone box with specified levels that I've given y'all. We set our limit there. As you can see, we get tagged in on the first candle. This shoots up. We go break even right there. Pull one off right there, let rest run all the way up to there. So I think we did have a couple more right down here. So also something I want to cover is this example right here, right? So obviously we have a bunch of gaps to fill up here. However, this is something key. When we mitigate a fair value gap right here like this, we come up, trade into it, and continue displacing down lower. I'm thinking of these as breakaway gaps. I'm not expecting them to be traded back up into. How, like, for example, though, if we didn't trade back up into this and this was sitting right here, I would not have counted this as a valid execution or a trade. I would have just waited for the next opportunity. But since we did bounce off this baby little one right here and continue to move down lower, this is 100% valid. This came down right here. Go break even at 6 points right there. Pull one off at 12, rest at 18. That hit our full TP, passed by 1 tick. So moving on, I think we did have 2 more on the 15-second before the 1030 ended. Yep, so 1030 close right here. So any trades need to be executed or entered before 1030. After 1030, it still works after 1030, but the most probable ones are going to be from 840 to 1030 because that's where the most volatility is in the market. And yeah, so this one, no unmitigated fair value gaps right here. Filled this one. Nothing right here. Inversed this right here. And then what do we have here? We have a little short-term high put in right here. Displaced above that. Created a fair value gap right there. Set our gone levels. Put a limit in right there. We'd go break even at 6 points. Right on this third candle right here is where we go break even. Pull one off at 12. Let rest go to 18, which would have hit right there. There was also a possible stack opportunity right here. If you got filled right there, sometimes that will fill and sometimes it won't, just depending how many contracts you were in. But if you did, this would have been a possible re-entry right here for another scalp setup is we displace above this short-term high right here, create a fair value gap. We put our gone level right there in that fair value gap, set our limit at the top yellow line, and then as you can see, this just runs up all the way up to 18 points. So that was the final 15-second one for today. There was a lot of 15-second opportunities today with this scalping model. I think there was not a single loser for the 15-second. I think there was one loser for the 30-second, but I'll go over those real quick actually. There was not a whole bunch of opportunities on the 30-second today. But I did want to go over this as a good example of unmitigated fair value gap above. And I'm sure if some people took this model and applied it today, they may have taken a loser on this because this is one of the key things. Hopefully they listened and realized that there was a little fair value gap here. Like I said, does not matter how small it is, how big it is. If it's there, it's there, and we do not take the trade. So what do we get right here is we get our scalp setup presenting right here. We have a fair value gap. We break this short-term low. We even have a change in state of delivery. But what do I see up here? Unmitigated fair value gap, open fair value gap. What am I expecting? I'm expecting price to trade back up into that before moving down lower. So if we got it in right here, right at our bottom yellow line, we set our scalp short. We actually would have got stopped out by one tick. This is why I don't take these ones. I wait and make sure there's no unmitigated fair value gaps. I like them to all be closed when a scalp presents itself. That's exactly what I mean right here. Because as you can see, if this wasn't there, likely this would not have traded up into here because we have this order block saving us right here. But since that's there, price needs to come up there so it delivers efficiently. And that's exactly what it did right here. Came back up and then dumped. So that's the point I'm trying to make. So let me clear some of these out. These are the 15-second ones. So moving down, we do have one right here, but this is, if you saw my tweet earlier, this is what I like to say is keep 5-minute liquidity levels in mind. If you know what I'm talking about, we would not take this. Why? We just swept sell side. We're expecting a reversal back into a range after a liquidity point is swept. And as you can see, that's exactly what happened right here. We reversed. Overall structure was bullish. So this makes sense why it wanted to return up here. But that is why I would not deem this as a valid entry. Because we just swept sell side. There's really no reason for this to go lower. So that would not have been valid. Let me clear some of these. Like I said, there was not a whole bunch of opportunities on the 30-second chart today. Trying to see anything right here. No. Clear this. Okay, this was the next 30-second opportunity we had right here. So we broke this short-term high right here. Displaced, we have a fair value gap lifted here. We put our limit in right there. This did almost come down. So this tagged us in the first candle coming down. This came down. How close is that? A point away from stopping us out. But that's why I like the 12-point stop is low-key nice because it will save you. So here we go break even at 6 points. Risk-free right there. And then this did run up and hit our first target at 12 points right there. And it did end up going 15.5. Almost 18, but it did not. This isn't okay, so this is another good point. Let me clear this real quick. This is why you want to add kind of semi-overall structure. You could take this, but this is a lower probability one because why? We're still making higher highs and lower lows. Right down here, we have this one right here. But what do? We just swept sell side right here. And price action's bullish, structure's bullish. So what can we expect is we're expecting up. So we want to be taking more so bullish setups rather than shorts, especially after sweeping sell side, like I just said. So I said keep 5-minute structure in mind. That will save your ass a lot of times. So right up here, this right here, let me clear this real quick. So this would be deemed a lower probability one, but A lot of times this will happen as we'll engineer liquidity right here. And since the targets are relatively low, realistically, I would not have taken this, but still something to explain. Scalp short. We go to scalp short plus. So we would have got filled right at that yellow line on the the first candle that for value gap. It did come down to 10 points. We would have gone break even right there. Did not reach any other targets though. And I want to say that might be, let's scan through. No. So let me clear this. We did have nothing right here. So this was the first actual valid loser, I'd say, because up here we swept buy side, we induced buy side, induced it again. This looks like a 3 drives pattern to me almost. So I was expecting it to go lower, got filled. Like I said, this is the one I did take on demo because I'm not trading any live accounts today just because it's NFP week. Usually Thursday before NFP is pretty ass, just saying. So even though that's why I was really watching the 15-second today, because obviously more opportunities are going to be presented on the 15-second. And when it's lower probability conditions, it doesn't hurt to drop down to a lower time frame because it will save your ass a lot of times and will prevent you from being faked out. So this one right here, we displaced below this low right here. Right, we got filled on that second line right there. This did go, it was pretty damn close for us to go break even, but went 4.75, almost, and then reversed up, stopped us out. And scanning through this real quick before, not valid, no. Okay, here is another one. So let me clear this real quick. This is a good example right here. So we have all this resting. This is why I like keeping liquidity points in mind. We have all this resting liquidity right here. All this low resistance liquidity, right? So we break a short-term high right there. We create a baby little fair value gap, and we can toss a limit in. Put it there. Scalp long, and right here, as you can see, got tagged in on that first candle. Down close candle supporting price, bullish price action. As you can see right up here, we would gone break even right here. Pulled our first one off right at 12, which lined up perfectly with that liquidity level. And as you can see, as expected, that didn't go 17 or 18 points because we'd already swept buy side. But that's another 30 seconds. So right now it's only had one valid loser, a couple TP break evens, W right there. Full W right there. I'm trying to see, make sure I didn't miss anything. $15. No. I'm just making sure I'm not missing anything. Okay, yeah, I believe that was, before 10:30. That was the last 30 second. But overall, it was a pretty good day, especially for pretty improbable conditions, like I stated. 15-second did go fucking crazy. It's something I'm going to keep looking at because it's pretty OP, especially when there's a lot of volatility in the market. You'll find that it moves so damn fast. So you got to be quick with this. That's why I highly recommend using NinjaTrader with the ATM because it makes everything seamless, makes everything really smooth. But yeah, that was the overview of the AM session for the scalps. Like I said, the 15-second went 9-0, no losers. I think the 30-second went about 4-5-1. I want to say 4-1. I can't remember exactly, but pretty solid day for pretty improbable conditions. Like I said, if y'all have any questions, feel free to just comment them down below, and I'll try my best to look at them and answer as many as possible. But yeah, see you later.